Hello again, you're with Smart Money here on Bloomberg UTV, and as promised, now we're talking about loans against property, which is when you take a loan against a property that you own. But what kind of rates can you expect over there? Are they a good type of loan to take? To continue with the second of our four-part series on loans, we have our friend at Smart Money, loan expert Harsh Roongta, CEO of ApnaPaisa.com, joining us here on this leg of Smart Money. Good to have you here, Harsh, again. Now, looking at loan against property, yesterday we were talking about taking loans against gold and gold jewelry, or, you know, diamond jewelry or whatever. Now we're looking at loans against property. So in what kind of a situation would you want to raise a loan against the property that you own?
So is this very similar to a jewelry loan in that sense, except that typically the ticket size needs to be large, because property ticket sizes tend to be large.
Correct.
Okay. It's procedurally more difficult. And the biggest difference is it also, unlike a jewelry loan where the asset value itself makes sure that you will get the loan, irrespective of whether you have defaulted in the past, your credit record is not good, you have no income proof.
Right.
In a loan against property, it is not just because you give a security. Even if you have security worth 1 crore, you might have difficulty raising a loan against property of 40 lakhs if you are not able to show income from which this 40 lakh loan will be paid off.
Correct.
So I think that's a big difference. So procedurally it is a little tougher. Plus obviously you need an income proof, but still it's much cheaper than a personal unsecured loan.
So when you say cheaper, you said the ticket size is larger, obviously. So what kind of ticket size are we looking at, and what kind of interest rates can one expect?
So typically you'll have companies catering to the entire spectrum. You'll have companies that will probably do ticket sizes of 5 lakhs or 10 lakhs also, but typically most banks that are active in this area need a ticket size of 10 lakh plus. I think on the maximum side it depends really on your income rather than on the asset values. I mean, loan against property running into crores are not completely uncommon. You definitely can see them, provided the income can support that kind of a loan. As I said, it's just not the security value alone that decides.
Do you see a lot of people taking this kind of loan against property?
Yes, definitely. And I think again, possibly like jewelry loans, a lot of these loans are taken for investments into fresh businesses, or for additional investments into existing businesses, or for loans for business against the security of an asset, a personal asset.
Correct.
And that's also possible. A lot of the loan against property is given as an overdraft facility. So I mean, that option is there when you take it from banks.
How does that work?
So it's instead of giving you a loan on which you pay EMIs, they essentially create an overdraft facility where the value keeps reducing every month. So that's your repayment. You will have to keep paying something back so that you meet the reducing overdraft limits that go at the end of every month.
Right.
The big advantage with an overdraft facility is that you pay interest only for what you actually use.
Right.
So it gives you the flexibility without tying you down to a repayment schedule.
Right. When we're talking about raising loan against gold, there is that emotional connect. You don't want to kind of let go of gold jewelry from home and being able to raise money out of that. I guess the same kind of logic applies to property, unless it's a second home, etc. It probably doesn't always seem very safe to kind of take a loan against the property that you're living in.
Not really. No? I have not really come across the same psychological this thing.
Doesn't work.
It doesn't work, and possibly there are two reasons to it. One, typically the jewelry in an Indian sense belongs to the women, irrespective of who on the balance sheet owns it.
Sure.
It is the women's property. So I mean, that makes it a family asset. But otherwise, as we know, most of the financial decisions in Indian families are taken by males. And the home is the biggest financial decision for most people.
Right.
And of course, with a second property or with a commercial property, there is no emotion attached in any case. So it's much less. I have not really come across it as a barrier to the for this product.
And when you default on the kind of interest that you have to pay on loans that you raise against property, how much of a risk are you taking on? Because this is property at the end of the day. What happens?
I mean, today under this RAFESI Act, when you default, the lender can actually take possession of the property and sell it off. So, I mean, the worst case is that they'll actually take possession of the property, dispossess you, and sell it off to pay back the loan and interest and any other charges that they might have incurred. and if there is a deficit left over, you are still liable for the same.
Right.
Of course, if there is a surplus, you will get it back from the
So how do you
lender.
safeguard yourself against a situation like that? Is there a possible insurance that you can take? What exactly can you do? Because property, you've invested a whole lot into it. Yes?
Right.
To be able to raise a loan, to be able to further your career, perhaps you want to take your business ahead. Those are the kind of reasons that you would raise a loan like that. But you don't want to ride up such a huge risk.
So one, there is an inherent cap on the risk because you have to have income. So obviously, just because, as I said, you have security, you don't get the loan. So your income is seen in any case.
Right.
But there is, and you can insure for the perils that are attached to the property. So you can take a fire insurance, an earthquake insurance, a terrorism insurance. Unfortunately, you can take a loss of job insurance as well. Very expensive, not easily available, and typically available, say, for a 2-3 month of unemployment.
Right.
Really. Beyond that, I don't think you can get insurance against default.
Right.
I mean, really, you have to repay that loan.
All right. Harsh, thank you so much for joining us from ApnaPaisa.com to tell us about how to raise loans against property. I'm sure you have more questions on this. If you do, well, pipe them across to us. Our email ID has changed. It's now smartmoney@utvmoney.com. We'll expect your emails and we'll get Harsh to answer those questions for you.